Imagine paying hundreds of dollars more every year for car insurance than your neighbor, even though you both drive the same car, in the same city, with a similar driving record. Sounds unfair, right? But it happens all the time. Why? Because your neighbor knows how to unlock the secret to getting the best car insurance rates. And in this video, I am going to show you how you can do the same. By the end, you will know the exact steps to take to save real money without sacrificing coverage. Number 1. Understand how car insurance rates are calculated. Before you can lower your insurance bill, you need to know what factors actually affect it. Insurance companies look at things like your age, driving history, location, type of car, and even your credit score. For example, a 25-year-old driver with no accidents might pay far less than a 19-year-old who just got their license. And a person with a spotless credit report could get better rates than someone with late payments, even if they have never had a crash. The point is this: understanding what goes into your rate gives you control over what you can improve. Number 2. Compare quotes from multiple insurers. One of the biggest mistakes people make is sticking with the same insurance company year after year without checking prices. Insurance companies adjust their rates all the time. The same policy that costs $1,200 a year at one company might be $900 at another. For example, one driver in Texas saved almost $400 just by switching providers after comparing quotes online. Think of it like shopping for a flight. Would you ever book a ticket without checking different airlines? Then why do it with car insurance? Number 3. Adjust your coverage wisely. Here is a secret. Many drivers carry more coverage than they actually need. Do you have a 15-year-old car worth only $2,000? Paying for expensive collision coverage may not make sense. Why spend $500 a year to protect a car worth only $2,000? On the other hand, liability coverage is something you never want to skimp on, because that protects you from paying thousands if you cause an accident. The trick is to balance your protection with your car's actual value. Number 4. Raise your deductible. Your deductible is the amount you pay out of pocket before insurance kicks in. If you raise your deductible from $500 to $1,000, your premium could drop significantly. For example, one family saved $250 per year by making this simple change. Of course, you should only do this if you can afford to pay that higher deductible in case of an accident. Think of it as a trade-off between short-term savings and emergency readiness. Number 5. Bundle policies for bigger discounts. Insurance companies love when you buy more than one type of insurance from them. If you combine your car insurance with your home, renters, or even life insurance, you could save 10 to 20%. For example, Sarah in Ohio bundled her car and homeowner's insurance and shaved $300 off her yearly bill. That is like getting 1 month of free car payments just by making a smarter choice. Number 6. Improve your credit score. Yes, your credit score matters for car insurance. Why? Because insurance companies believe people with better credit are less likely to file claims. Studies show that drivers with excellent credit pay almost half the price compared to those with poor credit. If your score is low, paying bills on time, lowering your credit card balances, and checking your report for errors can all help improve your score and eventually your insurance rates. Number 7. Ask about discounts you might not know exist. Insurance companies offer dozens of discounts, but they rarely tell you unless you ask. You might get lower rates if you are a student with good grades, a veteran, a safe driver, or even if you drive fewer miles each year. One driver I know got a discount just for installing an anti-theft device in his car. Another saved by completing a defensive driving course online. Always ask, what discounts do I qualify for? You might be surprised how much you save. Number 8. Consider usage-based insurance. This is where technology can actually save you money. Some insurers offer programs where they track your driving with a smartphone app or a small device in your car. If you drive safely, avoid speeding, and limit late-night driving, you can get big discounts. For example, one young driver cut her premium by 30% just because she drove less than 8,000 miles per year. If you are a careful driver, this could be your golden ticket. Number 9. Choose your car wisely. Not all cars cost the same to insure. Sports cars, luxury vehicles, and cars with poor safety ratings usually cost more. But a safe, reliable sedan or SUV can lower your rates. For example, a Honda Accord might cost $120 per month to insure, while a flashy sports car could be $250 or more. Before buying your next vehicle, always check the insurance cost first. Sometimes the difference in premiums can be worth thousands over the life of the car. Number 10. Maintain a clean driving record. This one may sound obvious, but it is powerful. A single speeding ticket can raise your rates by 20% or more. Accidents can keep your premiums high for years. Imagine paying an extra $300 every year just because you rolled through a stop sign once. The easiest way to keep your rates low is to avoid tickets and accidents. Drive safe, follow the rules, and your wallet will thank you. Number 11. Pay your premium in full if possible. Most people pay their insurance monthly, but companies often charge extra fees for that. If you can pay 6 months or a year in advance, you might save up to $100 or more. It is kind of like buying in bulk. Yes, it costs more upfront, but it is cheaper overall. If you have an emergency fund or some extra savings, this is one of the easiest hacks for lowering your bill. Number 12. Shop around at renewal time. Insurance companies often count on you being too busy or lazy to switch. That is why they sometimes raise your rates at renewal without any explanation. But here is the thing. You do not have to accept it. Always check other companies before you renew. Even if your current company is competitive, you will have peace of mind knowing you are not overpaying. Think of it like an annual health check for your finances. Number 13. Reduce optional add-ons. When you buy insurance, companies often push extras like rental car coverage, roadside assistance, or glass protection. While some of these can be useful, they also add up. For example, roadside assistance might cost $40 a year through your insurer, but only $15 through an auto club. Always compare and see if you are paying more than necessary for these extras. Number 14. Move to a safer location if possible. This one is more long-term, but it makes a huge difference. Insurance rates depend heavily on where you live. If you move from a high-crime urban area to a safer suburb, your rates could drop by hundreds of dollars. For example, a driver in Detroit might pay $2,500 a year, while someone with the same car and record in a smaller town might pay only $1,400. Obviously, moving is a big decision, but if you are already planning to relocate, factor insurance savings into your decision. Number 15. Take advantage of loyalty, but never depend on it. Some companies reward long-term customers with loyalty discounts. That is great, but do not assume it is the best deal out there. Sometimes a new customer discount at another company is even better. For example, one couple saved $500 by switching after 10 years with the same insurer, even after accounting for their loyalty discount. Loyalty is nice, but your bank account matters more. Number 16. Watch out for insurance traps. Sometimes, people think they are saving money by lowering coverage too much. But if you get into a serious accident, you might end up bankrupt. For example, minimum liability coverage might save you $200 a year. But if you cause a crash with $50,000 in damages, you will be responsible for the difference. The cheapest policy is not always the smartest. Aim for affordable, but not bare minimum. Number 17. Choose automatic payments. Many insurance companies give a small discount if you set up automatic payments directly from your bank account. It reduces their billing costs, so they pass some of that saving to you. For example, one driver in Florida saved $60 a year just by checking the auto pay box when renewing her policy. Number 18. Reduce your annual mileage. The fewer miles you drive each year, the less likely you are to get into an accident. Insurers often have mileage brackets like under 7,500 miles or under 12,000 miles. If you carpool, work from home, or take public transport more often, you might qualify for a low mileage discount. A teacher I know cut his driving by just 3,000 miles per year, and his rate dropped by nearly 10%. Number 19. Add a safe driver monitoring device. Some insurers provide a telematics device that tracks your speed, braking, and driving times. If you prove you are a careful driver, you could unlock big discounts. For example, one family installed the device in their 2 cars and saved a combined $400 annually. It also gave them feedback to help them drive more efficiently. Number 20. Join an affinity group or association. Certain professional groups, alumni associations, and even warehouse clubs partner with insurance companies to offer exclusive discounts. A nurse in California got a special rate just by showing her nursing license. Another driver got a discount through his university alumni program. Sometimes joining one of these groups is cheaper than the savings you get on your premium. Number 21. Insure multiple cars together. If you and your family have more than one vehicle, putting them on the same policy usually unlocks a multi-car discount. For example, insuring 2 cars under separate policies might cost $2,400, but under one combined policy, it could drop to $2,100. That is like getting 1 month of insurance for free. Number 22. Keep continuous coverage. Insurance companies raise rates if they see gaps in your coverage history. Even a short lapse of a few weeks can make you look riskier. If you are switching insurers, always make sure your new policy begins before your old one ends. A friend of mine forgot to renew on time and ended up paying $200 more the next year because of a 15-day gap. Number 23. Take a defensive driving course. Completing an approved online or in-person driving course can earn you a discount. These courses usually cost around $30 to $50, but the savings can be much greater. For example, one driver in New York saved $120 per year for 3 years straight just for finishing a 6-hour defensive driving class. Number 24. Avoid unnecessary claims. Filing small claims for minor dents or scratches may not be worth it. Every claim can raise your rates for years. For example, one driver filed a claim for $600 in damage, but her premium went up by $200 per year for the next 3 years. That means she ended up losing money overall. Sometimes it is smarter to pay out of pocket for smaller issues. Number 25. Review your policy regularly. Life changes quickly. Maybe you got married, moved to a safer neighborhood, or even paid off your car. All these things can lower your insurance rate, but only if you update your policy. One couple realized they were still paying for coverage on a teenager who had moved out years earlier. Once they updated, their premium dropped by $180 a year. Here is the big takeaway. Car insurance is not just about protecting your car. It is about protecting your money, your future, and your peace of mind. By understanding how rates work, comparing options, and making a few smart changes, you can cut hundreds of dollars off your bill every year. And that extra money can go toward paying off debt, building savings, or even investing for your future. So let me leave you with this. If you knew you were overpaying by $500 a year on your car insurance, what would you do with that money instead? Would you put it toward a vacation, pay down debt, or invest it for your future? Share your thoughts in the comments below.